Right, back with David Wong, AllianceBernstein, soloist around the desk here live at the SGX. And David, we've been talking a lot about Taiwan ahead of the elections starting tomorrow, right? I want to play you a soundbite from an earlier guest, Raghuram Rajan. I'm sure you're familiar with him. Let's take a listen to that and we'll continue talking.
There are red lines that China has, which it doesn't want any Taiwanese president to cross. That said, I mean, the news, so far over the last few months has been that the U.S. and China have started talking, and that's good news for the global economy. It's important that they make progress. Of course, there will be another big event later this year, the U.S. presidential election, which will have huge import. But the direction is good, and it's important that what happens in Taiwan doesn't disrupt that rapprochement.
All right, so David, I'm not going to ask you a political question, but based on politically what is likely to happen, at least now, right? If the incumbents return, the DPP, I'm wondering what that could mean for the market. Not so much China's backlash, but for the market, because I mean it's the second best performing market last year, at least after Tokyo.
Well, our biggest concern about the very strong performance last year was that it wasn't really based on earnings growth last year. It was based on an expectation that some of the cyclical sectors, especially tech hardware and semiconductors, would stage a significant fundamental rally this year, simply on the idea that inventories had been drawn down and that there would be new demand. I think what intersects with that story is if we're going to go through a soft patch in the U.S. and global economy, as many people expect in the first half, that could really moderate the pace of growth in that market. And I think we're already seeing some of that backlash and concern in markets like Taiwan and Korea because people are worried that too much is in the price today.
All right.
David, turning to this region, what should we own in Southeast Asia in 2024?
Well, in Southeast Asia, we tend to invest with a value bias, but we look at other signals, and we can't help but notice that earnings revisions have been most positive actually in markets like the Philippines or in Indonesia. And so we're just keeping an eye out for businesses that don't have that earnings growth fully priced into the shares. Broadly, we're still quite constructive on China, and I know that's an unpopular view these days, but we actually do believe that there are some significant opportunities there. A lot of things have been thrown out, the proverbial baby with the bathwater. For instance, we all know about some of the issues in the real estate sector, but believe it or not, we're finding some opportunities in the construction machinery business because of the export opportunity that many of them have. If you go to Dubai or Abu Dhabi, look at all of the machinery closely on the construction sites, you'll find that it's Chinese. And there's actually a very significant growth spurt that's happening at this point in time.
That's really interesting.